The Bill Williams trading strategy uses 3 moving averages with a offset and is mainly used to detect trends in prices. In this video I will test 3 alligator type strategies. 2 of them I have found on GitHub and the third one I created myself with a custom-made Bill Williams alligator indicator. And here we will find out if the alligator strategy can be used for crypto trading and which one of these 3 has the highest probability to make us money with trading. The original Bill Williams alligator trading indicator uses 3 moving averages, the 5 SMA, 8 SMA and 13 SMA, each representing a Fibonacci number. Each of these moving averages is also smoothed or skewed into the future with respectively 3, 5 and 8 to give it its characteristic alligator mouth. Bill Williams also gave each moving average a specific name that refers to the process when an alligator opening its mouth to catch a prey. The 5 SMA are the lips that open the first when the alligator starts to open its mouth. The SMA 8 are the teeth that are shown and then will open. And finally the SMA 13 is called the jaw, which opens the last. The strategies I found on GitHub are somewhat based on these principles but have their own specific twist on this strategy. And the strategy and indicator I created will follow Bill Williams' strategy as closely as possible, and this is to find out which of these versions would perform the best in the crypto trading market. So let's compare them side by side. The first alligator strategy I found is created by a familiar name, and that is Gert Wolgemuth. If you search this strategy on GitHub, you will find numerous locations that contain this file. So I will not point to a specific location, but you can search for this strategy yourself on GitHub. The second alligator strategy was based on the strategy on CryptoRobot's GitHub site. And that site also contains a Jupyter notebook with some explanations, and it even has an own YouTube video about this algo. So watch that video for more detailed information about this strategy. And the code for using this with the Fractrate bot is also available on GitHub in many repositories. So you can search for it yourself and use this for your trading. Now the last version for this video is based on the description that is given on Investopedia and is partially created with the help of ChatGPT. I also created a separate Python module for this and other rare indicators I use. This module does not only contain the alligator indicator, but also contains some other custom indicators that I created in the last couple of videos. And this way I can provide the community with all the indicators in a way that can be implemented in their own trading strategy. Now for a quick comparison between all these alligator strategies. First of all, they are all spot trading strategy types. In other words, they only do long trades. The default settings for the tested strategies are as follows. The alligator strat has a ticker interval of 4 hours. The alligator strategy has a time frame of 1 hour. And the Williams alligator strategy has a time frame of 1 day. Now as for the ROI, the alligator strat has a take profit point of 10%. The alligator strategy has a take profit point of 1000%, which is actually inactive then. And the Williams alligator strategy has a minimal ROI of 100%. The stop losses between these 3 algorithms are: alligator strat has a stop loss when it reaches 20% loss. The alligator strategy has a stop loss of 99%, which is the same as inactive. It doesn't work. And the Williams alligator strategy also uses the stop loss of -1. That means that technically the stop loss is not working in the strategy file. Now as for the used indicators, the alligator strategy, or the alligator strat has a data frame which consists of 3 SMAs, which with time periods of 5, 8 and 13. And also uses the MACD. The CodeRobot's alligator strategy uses the stochastics RSI and also a data frame which consists of multiple exponential moving averages, the 7, 30, 50, 100, 121 and the 200 EMA. And finally, the Williams alligator strategy, which tries to simulate the alligator strategy as closely as possible, uses only 3 simple moving averages: the jaw, teeth and lips. So the 13, 8 and 5 SMA. All these 3 strategies have different buy rules, and the first one, the alligator strat, has a buy rule when the SMA short crosses above the SMA medium, and also the MACD should be higher than 0 and should be above its signal line. The code robot trading strategy has buy rules that are not quite similar as the Williams alligator strategy. Not only does it use exponential moving average instead of simple moving averages, but these EMAs are also configured to act in a sort of like a ribbon, where every quick EMA has to be above its 1 factor slower EMA. And finally, the stochastics RSI should be below a stochastics buy value to create a buy signal. And finally, the Williams alligator. Here the jaw should be lower than the teeth should be lower than the lips, but when the lips are above the lips minus 1 day and close is above the lips, and also the volume is above 0, then there is a valid buy signal. And as for the sell rules, when the alligator strat detects when the close is below the SMA medium and MACD is below its signal line, then it closes the trade. In the robot's alligator strategy, when the EMA 121 is above the EMA 7, but also when the stochastics RSI is above its sell level, then with the volume being greater than 0, it makes a sell. And finally, in the Williams alligator, the sell rule is as follows: the jaw should be above the teeth should be above the lips, but the lips should be below the lips minus 1 day, so yesterday, and the close should be below the lips. And then, of course, the volume should be above 0. Now, of course, I backtested these 3 alligator strategies according to my standardized way, so that I can compare the results with the earlier trading algorithms that I tested earlier. And the results are as follows. The alligator strat by Gert Wolgemuth has a moderate end score of 132, mainly because of its low profits and low Kalmar, Sortino and Sharpe ratios. Personally, I think that the win rate is pretty high and the drawdown is moderately low, which is good of course. The main reason this strategy scores this way is that the initially configured ROI makes most of the profits, and the exit signals of the alligator indicator uses the most losses here. Maybe if I configured this algorithm to let its winners run instead of taking profits, it would score much better. And finally, I really like the way the profits are distributed across the different pairs. No pumps caught, but nice honest inclines and some declines. And as with most tested strategies, the biggest drawdown period starts at the height of the last bull market, when it turned into a bear market. The crypto robot alligator version does a much better job at catching big trend waves. The ratio scores are much better, but as you can see from the win percentages and drawdown, this strategy version on this 30-minute time frame suffers the same fate as with many other trend trading strategies: low win rates and high losing streaks and high drawdowns. Since the ROI has been disabled by using an insane high win percentage amount, the only exit signal comes from the configured indicators here. And as you can see, it has a high loss percentage. But if it catches bullish moves, it rides them out until the very end, so it seems. And this also can be seen on the profits plot. Here also the Gala USDT pair was caught in a major bullish wave and made lots of profits here. And as said in earlier videos, this is not guaranteed to happen in the future, so you have to take these anomalies into consideration when you choose to use this strategy. The other graphs speak for themselves and I will not discuss them here, but I will quickly turn to the Bill Williams alligator strategy. And this strategy that I created with the help of ChatGPT has a performance that lies in between of the other 2 alligator algorithms I just discussed. The 4-hour time frame catches just enough trades to make it very profitable, but at the same time it suffers from a low win rate and a high drawdown. The 1-day time frame looks to perform better, but since this time frame has an even lower Sortino, Sharpe and pairs ratio, it scores slightly less high, making it a close second. And as you can see in this algo, I also tried to disable the ROI, but apparently not high enough because it still caught a 1 trade with 100% win. The other exit signals are caused by the reversed alligator indicator signal settings. And maybe if I tweaked something here and there that did not make it exactly the opposite as the buy signal, it would probably perform better. Now, funny enough, this alligator version is the more active one in trading than the other two versions. But it still has its peak around the last bull market, and it also caught the gala pump here, so be aware that these occurrences are rare and might not happen in the future. The average drawdown is between 42 and 72% over the complete backtesting period, so take this also into consideration as well using this alligator strategy version. Since the crypto robot version performed the best, I also optimized this version to see how much profit I could squeeze out of its performance. And after the optimization, I got the following backtest results. The optimization only changed the stochastics RSI buy and sell level, and after a backtest with only these changed levels, I got the following results back. The changes are marginally, but still it improved the effectivity of the strategy. The drawdown improved with 7% and the CAGR, Sharpe, Sortino and Calma ratios improved as well. The win rate did not improve, but the amount of losers in a streak and the average losing streak did improve slightly. The average profit percentage also performed with 15 points, and together with the same win percentage, it improved the hypothetical cumulative profit by a lot. Again, no ROI and stop loss exits, since these were set at insane levels that probably would never be hit, leaving the exit signals to the strategy's indicator exit signals. Now finally, the profit plot that you get as a result of the backtest, and comparing this with the previous plot, there's not much special to say here. The bot is very active in trading and catches some nice pumps, of which I already told you the downside of this. The basic rules of the alligator trading strategy are very simple, mostly because it uses very simple indicators and trading rules. It also provides a lot of trading signals to follow, and some of these signals can provide a trader with great wealth. However, one of the greatest drawbacks of this trend following strategy is that it can also generate a lot of false signals during market circumstances that are moving sideways. You'll have to realize that 70% of your trade signals will be false and may cause many losses. The 30% that do make you money will do it really well. And that is in backtesting theory, of course. At this moment I can conclude that the alligator strategy certainly has potential as a baseline for your trading algorithm. At the moment, the crypto robot version of the alligator strategy, using multiple EMAs, takes its place at the 13th position of the strategy league, which is a fine position for such a simple trend following spot trading strategy. And with this knowledge I've come to the end of this video. Thanks all for watching this video, and leave a like or comment if you have it, and click subscribe and the bell icon if you want to get notified on new content. My personal indicator library for Python is available on PyPy, but it's still in its early development stage, so use this at your own risk. All the backtesting output, strategies, optimizations and more is all available on my Patreon page for my patrons. And again, thanks, and I will see you in the next video. Goodbye!